I guess the implications are, well, first of all, there's a sort of a geopolitical issue here, which is that they're going after the central bank reserves, which is the sort of the buffer that the economy has in order to withstand any shocks. And essentially, the decisions that were taken over the weekend, especially by the Europeans yesterday, has effectively frozen about half of the reserves that the central bank has. Now, what's really important here is the fact that in recent years, as a result of the fact that the too many or not enough safe assets in the Eurozone, the Euro system and the central banks of the Euro system have begun to accumulate deposits on behalf of central banks. This is known as the reserve manager services that they provide. The largest of the Eurosystem central banks being the Bundesbank. So they were in this uncomfortable position yesterday where if they had just blocked Russian banks from SWIFT, you would still have had the central bank that would have access to its reserves in Europe, probably about $150 billion in securities and about maybe 120 billion in deposits with the European banks, with the Euro system, and in terms of government securities. So the decision they took yesterday to freeze the Central Bank of Russia's reserves basically means they have cut off about 50% of their international reserves, which essentially means now the CBR has a much smaller buffer to withstand shocks, hence the movement in the currency today and the need for them to shore up the currency using interest rates and capital controls and so forth.
What further measures could the central bank and Russian authorities take to mitigate the impact of these measures? And do you see them turning to another asset, gold, or even something like cryptocurrencies, for example, if they need ways to trade and exchange internationally?
So they have obviously gold, and so they have about 130 billion in gold reserves, and this is held domestically. So they've clearly made the effort to bring the gold back in case a situation like this would arise. And they obviously have other securities which are with China and probably places like India. So they have some access to other liquid securities. It's just that only about half of what they used to have. So the obvious thing for them to do is to sort of use the gold, but it's not clear exactly how liquid that is going to be at this time. But presumably they will find a buyer if they look hard enough. And then the other option is to use the securities they have in China. And essentially, I mean, one way we can see this working out in the long run is that China and Russia will end up with larger sort of bilateral relationships in terms of trade and finance. And so Russia will essentially be cut off from most of the world, but will end up with a sort of a trading and financial relationship with China and maybe some of the other countries, maybe some of the other BRICs like India.